On this episode of Pennies Going In Raw, we transition to the new year of trading. Hugh has a new swing, and we have the 2020 Fintwood Awards.
Hey, yo, check 1, 2. This is Flavor Flav in the building for the Atlas crew.
Atlas Trading, what the fuck is up?
There are traders, there are prodigies, and then there's legends.
We're up 4%, baby.
No way.
4 fucking percent. Buy the fucking dip.
Hey, who told me about IDEX?
Like, dude, what the fuck? Like, someone just made, like, a lot more money than me on my trade.
You find out life's this game of pennies.
Did you check the portfolio?
Pennies. The margin for error is so small.
I bet Warren Buffett never did that.
And they out there making money right now off of penny stocks.
Them two guys is putting in work to make y'all rich.
The pennies we need are everywhere around us.
Time to think big.
Pennies Going In Raw.
Featuring Dan, Deity at Dips,
and Hugh Honey.
Produced by Vinny Strokes, baby.
Welcome to Pennies Going In Raw, sponsored by no one. New year, new sponsor, or lack thereof. Email me at dan@penniesgoinginraw for inquiries. Thanks. Today is Sunday, January the 3rd, and although SPY closed above 374, last week was a little bit of a roller coaster. It was like Monday good, Tuesday bad, Wednesday decent, New Year's Eve, and 2020 kicked us out of the door pretty rough. What do you think about that one, Hugh?
Yeah, I mean, it's always a low volume week. So if anyone remembers from 2018, we talked about this, but 2018 saw a pretty steep drop for the headline that came out. I think it went down like 7% on a headline that wasn't even confirmed yet. And that was just because there weren't any bids out. I think SPY, the most that I saw SPY do was like 60% of the normal volume on a day. And I think that was like Wednesday. So it was an overall low volume week. So any headline was either making it, push hard or fall pretty decent. So it was expected. I was moving money around last week. So I mean, all in all, it really wasn't that bad. My worst case scenario was that we got a really bad headline because, again, we still are technically in an election year, if you will. I was fearing that a report would come out that Trump says he won't leave the office, or they'll have to take him out in handcuffs or something. So, that was my fear, was that we would come to a really bad headline. And again, there just wouldn't be any bids there to support the price. And then we would just see a halt down. So that's really what I was fearing.
For sure. I know the good thing that really I feel like helped a lot of the week out was how good Monday was. I mean, it was just a really good Monday, especially for all the people that are swinging SPACs. And then whenever it came to Thursday on New Year's Eve, it was such a low volume day in the market that I feel like a lot of people were comfortable adding on dips too. But like I just touched on, SPACs were the big roller coaster ride of the week, which kind of started on an absolute roll with money falling out of the sky and Zach Morris gifts flooding the timeline per se. But that quick halt on Tuesday, there were tons of dip opportunities. But what did you kind of think about that with IPOC dropping, AMCI, GHIV all dropping 10 to 20%?
Yeah, and well, that's the thing is that I know one of the things I'm swinging is EQOS, and it's a Bitcoin play. Yeah, it's a Bitcoin play, and the thing is, it went up 52% on Monday, and then Tuesday I was getting flooded with DMs. So it's down 12%. It's down 12%.
It hit 16, I believe, and then dropped back to 13 or 14. It was I mean, even I woke up the next.
Yeah, but it was trading underneath 10.
Yeah, no, it was wild. I mean, and I played that one twice this week, and it was like that. That was one of the things that made my Wednesday so not so bad, was because of picking up those dip ads in the morning.
Yeah. I really think that, when you guys have to take into consideration, which is why I think that overall, most people, one of the things that when I work with people closer on swings is that I tell them to take off the P&L on the day or have two separate accounts, one for swinging, one for day trading. Because what happens is that, if you have a $100,000 day on Monday and then Tuesday you come back and you're down 40 grand. I mean, overall, you're still up 60 grand on the week. That's a good week. But you're like, oh my God, you're panic selling. And again, Everything needs to pull back. So that's why if I'm just having a horrible day, I'll take out, the P&L on the day, and I'll just look at the P&L on the open, because then if I open up a position and I go up 100,000 the first day, and then the second day it drops and now I'm only up 60 grand, I'm still feeling good because I'm still up 60 grand.
It's super interesting you say that, because I've always been more of a day trader, so I've always been the opposite. I've always been take off everything else except your P&L for the day on that stock and stuff. So it's super interesting how different we always find ourselves playing.
That is, probably one of the reasons that we work so well, is because we are so different. Half the time, I got 5 or 6 accounts rolling. I'm not looking at the P&L on the day, and all you're doing is looking at the P&L on the day.
Yeah, no, so it's super interesting. Definitely how we manage different ways, and how there are just so many different trading styles. All right, but transitioning over, where do you see the market kind of going from here with SPY? As we just said, hitting 374. It's always testing those all-time highs. You think we go for 400s, or are we back to 350?
Yeah, obviously January, for anyone that doesn't know, January 6th is going to be a big day. It'll decide the Senate, which will also kind of, it'll more confirm the Biden win. At this point, Trump having a chance is kind of out of the question, but that doesn't mean that if a headline comes out that it can't affect the market, because again, the market doesn't need a bad headline. It just needs uncertainty. If anyone remembers this time last year, or I guess it was like more towards the end of January, Saudi Arabia, the oil attacks. We didn't even have confirmed sources yet, and oil was down a huge. I was in Costa Rica, and oil was down massive.
Yeah, I remember PAC-D, the drilling company, was at $5 then.
Yeah, exactly. So, the market doesn't need a bad headline. It just needs some uncertainty. So with that coming up, Wednesday? With that coming up on Wednesday, I think that we could have a little bit of choppiness earlier in the week. And then I think when, if everything's confirmed, then I think that we could see a really good rest of the week. And I think that really, the market right now to me seems to feel okay. Tesla really, with Tesla running hard, NIO just came out with great numbers today. So I really think that in the next few weeks will tell us a lot about the market. That being said, the market needs a pullback. I would like to see like one big push, maybe to like 385, 380, 385. And then I would like to see like maybe 6 weeks of choppiness and maybe like a slow trickle down. Because then that kind of sets us up. If we remember back in March, think about the chart. If we see, we've seen some choppiness, we've seen some range. So if we get one more push up and then we come down again and then we make another push up, then, SPY will see 400, 420, no issue. So also with Biden saying that he's, talking about a $5 trillion coronavirus plan. So I really think that as far as the short term, the next 3 weeks, I think that SPY is pretty okay. I think February is going to be where the choppiness starts. And I think that we're going to see some choppiness. And like I said, I would like to see a pullback, because pullbacks are healthy. I would like to see a pullback for a huge pinball bounce back to all-time highs. That's how I'm kind of playing it. Again, let's see what the market gives us. Who knows? Who knows? Maybe something, some crazy headline comes out, and the election comes into question. They're saying that there's still a chance, right? That Trump could still technically be in the running.
Oh yeah, every person in Alabama is saying that.
Yeah, so let's see kind of where it brings us. But I think it's at the very, very, very short term that the market will see an all-time high before seeing a real pullback. I know Brady and Atlas has a pretty good. He's been pushing for a pullback, and he has some pretty good research, if you will. Now, something else that I wanted to bring up, talking about SPY, is that some people who I kind of follow closely is they're called LPL Research. I first found them on Traders for a Cause, I want to say about 2 years ago, and what they do is that they give pretty good research, but more importantly is that they give really good seasonality reports. Thanksgiving, we talked about how if there's ever a dip in Thanksgiving, 83% of the time the market goes up more than 2% into the end of the year, hence making the Thanksgiving dip a dip buy or a dip opportunity. they just came out with a report. Some guy I follow on Twitter from LPL who, again, talked at Traders for a Cause is, I retweeted him, Mark Dietrich. I know I'm butchering the name. And the seasonality report that they put out was that in the last 5 times since World War II, that the market has gone up north of, I believe it's 15%. The following year, the market has always gone up, and the average the market has gone up the following year has been 18%. I mean, let that sink in. That's a pretty good statistic.
All right, it just sunk in. Wow.
Okay, so I mean, 18%. Could you imagine if SPY saw another 18%? I mean, the market, I think, closed officially up 16% on the year. If you really, I mean, imagine if you caught the bottom in March and you rode that up. I mean, you would see like a 45% return. So I think that that's really important that we think about, the seasonality. And so we could see, hypothetically, I would like to see a SPY pullback and then just a huge run until summer. So, my timeline again is, next 3 weeks, SPY hits another all-time high. Then we see 6 weeks of choppiness / a pullback. And then from really, I'm thinking really maybe end of February, March till really summer, we just run like mad, kind of like what we saw. I mean, because again, the market ran months on this stimulus news or on this, stimulus hopes. So, and that was on that was on 900 billion. Imagine, imagine what it'll do, running on hopes of a $5 trillion stimulus bill. So I think that that's kind of how I'm thinking about playing it. But again, we'll see what the market gives us. And that's kind of what I'm thinking about SPY going into 2021.
All right, so you talk about this bill from Biden for what, $5 trillion or whatever he said it was, an absurd number. And is this going for the stimulus, or is this stimulating the economy? What is this going to? Vaccines or what?
Yeah, so this will be, again, is that there are just reports on this. He's mentioned it, but we haven't seen much into the details of it. But what I'm hearing is that it would be, every American under, I think it's the $150,000 threshold. Right now, if you make, I think it's over $75,000, then you're not seeing any of that 600 or 2,000, whatever they end up giving us. If you make that amount, then you're not seeing it. There were reports that every American that pays taxes will get, under, I think it's they're going to bump up the income limit to $150,000 or something, will get $2,500. And that'll be included inside the $5 trillion, along with boosting the economy. So the airlines, the cruise lines, the hotel industry, they'll all get, a piece of the pie, which would be, the banks will be allowed, the banks are now allowed to do buybacks, but they can do bigger buybacks. So basically just across all ends of the economy, people will be getting a slice of the pie.
All right, gotcha. Yeah, I can definitely see how that would help SPY out going into January and on. All right, so that is where you expect the market kind of overall going into 2021. But tomorrow is the very first day of trading in 2021. What should we be doing mindset wise or just trading wise in general? Maybe getting ready for quarterly taxes earlier. What are some of the things we can start doing earlier this year to kind of get us ahead or get us a boost into trading properly into the year?
Yeah. Well, something that I wanted to mention in the taxes podcast that I had bolded on my notes, but I forgot to mention, is that you have until January 15th to pay your Q4 estimated tax. So we talked about estimated tax, but what I wanted to tell you was that, if you haven't paid any taxes and you are, let's say you made over 6 figures in profits this year, go on, and I'll link the IRS website. Go on there and pay at least half of what you think your estimated bill for 2020 will be. And this will really set you up, because then, okay, let's just say that the market takes a huge hit and you lose all of your account. Well, now you already paid half of your taxes. And also it shows a sign of good faith, okay? Although you have until April to file, or if your company, March, although you have till that time to file, the IRS wants their money. So by paying a good amount, up front, I pay about 50% before the end of the year, until I figure out what I really, really owe. I take my estimated and I pay 50% because then that kind of shows a really good faith to the IRS. That's something that I wanted to touch on. But getting ready for 2021, okay, there's a few things mindset-wise and stuff that you can do, before the year, as we roll into the year that you can do. Mindset-wise, something that I love to do is I like to take a step back and I love to reflect on the previous year. I personally get absolutely hammered and I sit there and think about the year. That's just what I do. That might be a little depressing, but I just think about everything across all borders, and naturally my brain leads to trading 99% of the time.
So what would you recommend for people that aren't trying to get plastered?
Yeah. I would, take a long walk and just think about the year as a whole, how you did, what you want to improve on. So, one of the things that I realized that I did really well this year was, giving, personally, when I have a bad trading day, I typically take it out on my mother. I love you, Mom, but I typically take it out on my mother.
Start beating the shit out of my mom.
I'm just like in a bad mood. I just really don't. I just don't like to talk to anyone.
No,
when
Hugh,
I
don't
have
hit me again. No, I lost 100 grand, Mom. Get your ass over here.
So something that I thought that I did, she'll probably disagree. But something that I felt like I did well this year that I didn't realize until I had my reflection was that I was a lot less, I was a lot better about taking losses this year than previous years. So I just like to, taking a long walk. I like to decompress. I don't know about you guys, but my mind is always stimulated. I'm always thinking about a billion different things. So, focusing in on thinking about the year and going from month to month. That's how I really, and remembering certain things. That's how I like to think about the year. And then I really try not to think about the previous year or years unless I'm doing it for, like to help someone out or something. Because really, 2021, Monday's a clean slate, baby. The market does not give two fucks about what you did in 2020. The market only cares. The market doesn't care. So, great. You did 4,000%, last year. Cool. Monday, you're back to zero, baby. You haven't done anything. If you played sports, it's the same thing. Like, it doesn't matter what you did during the season because when playoffs come, once you're done, you're done. So that's how I like to set up. And then I also have a routine, that I try and do as the year, starts. The timeline varies, but I usually like to do the same thing before I really hit the ground running every year. Dan, are you going to do anything this year to get ready for trading in 2021?
Yeah, man. I plan on doing Pilates, lots of yoga. Hell no, man. I'm a podcaster. I've got to practice my voice every day. I'm not reading or anything. What are you doing?
Oh, dude, you know what? If you need help, I know an actress who can help you with your, warming up of your voice if you need it.
I'll keep that in mind.
No, but so what I like to do is every year I like to go through, I have about 5 or 6 financial books that really have helped me change my mindset throughout trading and which have really helped me in life. And so I like to reread those books, and at this point, some of them I'm more not skimmed through, but I already know how everything goes. So chapter by chapter, I just kind of if I already know what they're gonna say, then I just kind of skim through.
Like I already know Lenny dies or George kills Lenny in the end.
Yeah,
and
exactly.
No, I know it happens. The red dress. Yeah, I got it.
Yeah, so I also like to add a book to the mix. So this year, shout out to Killer T, he mentioned Trading in the Zone. And so I'm going to start reading that on Monday.
What are some of those books that so some of our listeners, because I get a lot of requests for books and I don't know how to read, so I think it'd be nice if you could name some of those books that are on your beginning of the year read list.
Yeah, so I have, and again, because I have, we get the same questions all the time about what books help learn to trade and stuff, and none of these books were like, oh, this is what a catalyst is. This is what it is. It just changes my mindset. Like I know we get those questions a lot, and there's really none of those books out there. Like there's some books for charting, and there's some for this, and there's Elliott wave theory. All types of books like that. But like there's no one book that's going to tell you this is how to trade. Chapter 1. So these books are more about mindset because I'm really into. If you guys remember our bad motherfucker. Episode, these are more about mindset because, 50% of trading is really the psychology, is adding those dips on Tuesday instead of panic selling. We have one follower who we interact with a lot and he's a great guy. It's Mr. Belford's dad on Twitter. And one thing he DM'd me or he commented on one of the things and he said, 6 months ago on Tuesday, I would have sold. It's awesome to see, it's awesome that you, Zach, Dan, are all buying the dips and showing, and helping us guide because now he started the day down I think it was 50 grand or something, and he ended the day only down 10 grand. So,
conviction is always, even like we mentioned on the Zach episode, conviction is always such a huge thing.
Exactly. So these books, I want to make it clear that these books are more mindset. So I'm always a huge fan of Ray Dalio. For anyone that doesn't know him, he's a billionaire. He had some really bad ups in the 80s and he went from really destroying and he ended up really changing the market. And then he went from that to almost being homeless. He had to ask his dad for rent. So, he's also a little crazy. He puts microphones throughout his fund and he records everything that his employees say. So, he's a little crazy. But as far as that goes, just hearing his adversity to go from, really changing the market to being homeless to being, one of the top hedge fund managers. It's called Principles. It's kind of things that he lives by, both economically, in his personal life. One thing that I really love is Rich Dad, Poor Dad. Although I've recently found out that whatever his name is went bankrupt.
Yeah, I know. I saw a little. I dig down some rabbit holes, and the same guy that made all these ones on Dan Bilzerian being a fraud also went on. Maybe the Rich Dad's actually Poor Dad.
Yeah. So I still like the book is from a mindset perspective, but I was like, geez, it's kind of like finding out that that your father's not your father.
You're adopted.
Yeah. Yeah, exactly. So I was actually really, I was kind of bummed that day that I found that out because that book I really think is from a mindset perspective is really, really good. Because, I have the same mentality, fuck the system. You guys saw my tweet rants on Saturday night or whatever about the system. But that being said, I love Rich Dad, Poor Dad principles.
I don't think you hate the system. I think you just hate college.
Yeah. TCNJ, if you're listening, we're at war. You don't know it yet, but we're at war. Yeah, no, you're right. I do. I really do hate college. If anyone wants to do my accounting class, hit me up. But that being said, the other books that I love, there's this Goldman Sachs options book, which, it's like 2,000 pages. It is so in depth. It's actually not on the market for sale because it's more of like a trade. It's what they used to give the traders in the 80s. Don't ask how I got it, but it's really in depth. So I like reading that. And then finally, I like going over the Elliott wave theory. I have a PDF download that I printed out. And that's really good because that just helps with charting and stuff. And then finally, the last thing that I love to go back through is seeing my notes from 2014, 2015. Seeing I remember writing down the difference between fundamental analysis and technical analysis. And I was and at that time, I was oh man, I'm really getting into the nitty gritty of it now, I'm really Paul Tudor Jones.
You should just listen to the podcast.
Yeah, I know. Paul Tudor Jones, watch your back, baby. So I like looking back, not only reflecting from how far I've come, but also, some of the most simple things that I used to write back then, have helped me. Well, not necessarily back then, but maybe in like 2016. Some of the things I used to say in 2016, when I look back, I'm like, oh yeah, that's right. Like, just simple things, because I personally, I take really detailed notes. Some things that I forget, because when we trade, it becomes like almost like a muscle memory. So sometimes looking back and remembering the fundamentals and the basics, it really helps me. So I've incorporated that into my yearly routine.
Okay, so transitioning out of the books and back to what we were on about, you were talking about some things for new traders.
Yeah, so a lot of the people that follow us, I know a lot of you guys started within the last year, maybe the last 16 months, which, even though it seems like a long time at this point, that's really not that long. They say to master something, you have to spend 10,000 hours. So, really, you guys have, if you've only been trading a year or 16 months, 18 months, you're kind of newer to this. So especially, if you, this might be, I know a lot of guys that, DM me, this is their first profitable year, which congrats to you guys, huge ups to you guys. And they had a killer year. So what we talk about is, they have goals, and I have goals for this year as well. I know Dan has goals, and Vinny and Zach and PJ. And so we all have goals, but how do we, how do we change that mindset going into the new year with, okay, if I want to make $1 million, that means I have to average about 4,000 a day. Well, if we see a pretty big, let's just say that we see choppiness for 2 months and you're not hitting that goal, and let's just say that you're even losing money, if you're going to have a down month eventually, eventually you're going to have a down month. So something that I like to remind myself, and especially some of my friends that are newer to trading, is that we have to change the mindset that we have to have goals, and we have to always keep the goals in mind, but they need to be flexible.
Yeah, they need to have adjustable goals.
Exactly.
Like like you said, if it's 2 months if you're still set on $1 million, you're going to have to make it $5,500 or $5,200 a day, whatever it is. Don't feel like doing the math sort of hand. But yeah, they had to be adjustable, and I think setting financially, and then having almost like a flow chart. If it doesn't happen by this, here's what we can do.
Exactly. And so we always talk about adapting, and some months, I have 100% on the street. Other months I'm down to like 40% on the street. So obviously it's a lot harder to reach those goals when I'm only using 4/10 of my capital. So one of the things that I like to think about is one thing that I actually wrote, and I keep it on a Post-it note. I have a million Post notes, but is all it takes is 1 month, 1 week, 1 day, 1 trade. And maybe we'll make that merch or something. But we have to remember, I remember I was back in, early November. I didn't think that I was going to hit my end of year goals for this year. Because I didn't have a great September. Even October, the end of October was good, but the beginning of October and August, September, and the beginning of October, I didn't do well. So I really didn't think that I was going to hit my goals. And then all of a sudden, the last like 5-6 weeks have just been absolutely fire. And actually, I didn't reach all of my goals, but I came a lot closer than I originally thought. I was about 30% off of my goals, and I ended up only missing them by about 3%. So something that we have to remind ourselves is that if you want to make $1 million next year, and the first 2 months, you're only at, let's call it 100,000, and you've only hit half of where you're supposed to be. We have to not get discouraged, and we have to remember that this is the long game. Okay, that you could only make 500,000, and then that December, those 3 weeks in December could just be absolutely fire, and you make that 500,000. I have a friend, William Hunting on Twitter. He's also my roommate. He was hitting, he was kind of stagnant for a few months, and then inside this past 2 weeks, he has done 30% of his account. And he had his biggest day, so props to him. But, something that, he was kind of getting discouraged. And we have to remember, 1 trade, one day, 1 week, 1 month. That's all it takes. So I think that that's really important, that if this is your first full-time year, or this is the first year that you're going into it after a profitable year, to keep that in mind, and to keep that in mind when you're thinking about your goals. Dan, what are your goals for this year?
Shit, man, I hate when you do this. Let's see. So I think my goals for this year, I do like to keep them spread out. I like to have like a financial goal, a work goal, not financial related, and then like a mental goal. So for financial goal, I would still have this goal of hitting 1 million by September. Currently at around 150. Which is, it's good from the 2K I started with in January. So I'll take that. It's a lot less percentage wise that I have to get, but still, I don't know how the market's going to be. For the podcast, I have goals of getting it into at least the top 10 overall podcast and getting it #1 business and investing, while getting enough ads to make it almost like a second retail stream.
Nice.
And then third, I want to move. I want to get out of Alabama and see where I can get to that's not here. And those are my.
Is Hoboken on your list?
I do enjoy Hoboken. I really like Hoboken. It's a little pricey. Everything around there is a little expensive, but I like it there. I'm not a big fan of New York, but Hoboken's a nice area. I'll need a few bigger trades to be able to afford Hoboken, but I'll keep it in mind.
Yeah, let's roomies. Yeah, that's awesome. Yeah, I think it, I heard a few that weren't trading related, and I think that's a really awesome. That's something that I almost always forget.
Yeah, you can't focus only on trading, and that's probably why you're so depressed. Is because
I do be depressed. I'm not a happy individual. I'm just depressed because I'm in college.
Yeah, nah. Most people are just like, why? What am I gonna do after college? But you're just like, oh, this college it's a bitch. So what are your goals? I'm sure they're going to be extremely unrelatable and totally absurd. So let's just hear them.
Well, I tweeted a majority of them.
Oh yeah.
And so I'll some of those goals were I want to do. So as you guys know, I have a few accounts. Inside the main account, the swinger, I want to do an 8-figure P&L a year. All my retirement accounts, I want to get above 6 figures. I just opened up another Roth, so that one I want to do 1,000% in that one, and I want to do 1,000% inside another account that I have that I've been working on. 8 figures inside the main account, like I said. This year, my parents, I really wouldn't be here without them. So I helped them out a little bit.
Yeah, most people wouldn't.
Yeah. Yeah. So I helped. Yeah, that's true. So I helped them out a little bit, financially, even though they don't need it, but I helped them out financially, and I want to do about 4 to 500% on their account, really just being risk adverse and just really, trying to set them up. My sister, who is also my twin, she does not have a Roth IRA. I have failed. And, I really want to get her to open up a Roth IRA, and I want her to trade it up to 6 figures this year.
She knows money doesn't buy happiness. She doesn't need one.
That's what she says, but she still she works at Lowe's and she works for a police department. I don't know if that's going to get her. She keeps looking at $6 million houses in North Carolina for that she wants to move to, and I'm like,
that's just what girls do. They go on Zillow.
Yeah, well, Lowe's isn't going to get you there,
True.
And then I want to continue to grow the podcast. I really think that, I mean, Dave Ramsey, he's going to be like the mother to take down. But I really think that we can get the podcast, top 10, top 10 overall and #1 across all business genre, finance, stock market, all that. I think that we can get it to #1, and I think that we can get it to number 10.
Yeah, for anyone interested, we did hit number 32 overall. We passed some things like Pardon My Take. We're a few away from like Caller Daddy. We were number 4 business and number 2 investing. We were 6 overall ranks from being number 1 business and number 1 investing.
Yeah,
it just shows how tight we were with that one. The Zach episode was a big success. Thanks for that. So moving on from goals, what else is there in 2021 that you think you might be doing differently than 2020?
I was really hoping that I was going to be able to focus full time, on trading and not have school in the way. That's unfortunately not going to be the case. But that being said, I think that, from a trading aspect, I'm going to stick to, something that Zach's really helped me with is sizing up, really having those, bigger, not just conviction, but overall sizing into plays, having a decent amount of money into a play. And Zach talked about it, that each IPOC, what was it? Every quarter was equal to, or every dollar was equal to 260 grand. Is that what he said?
Yeah, he had 260,000 shares, like 2.6 million at 10. So every dollar is 260 grand. So every $4 a million.
Yeah, so
so that's probably why I didn't tweet it all on Tuesday when it went down $1.50.
Yeah, so I'm really trying to, he's been helping me. I'm really trying to size into the plays, and instead of, because that's something that as my accounts really grew, which I did the numbers on Thursday, I'm going to really work on sizing into plays and having, because at this point it's not about having X amount of the percent of my portfolio in there. It's more about the dollar amount at this point, saying like, okay, wow, like every dollar, this is like 4 times the average American salary.
Yeah, I think that's a really good way to do it. Like, instead of even just dollar amounts, even just doing like the amount of shares. Like, as someone who trades personality and ranges, I know if I have 10,000 shares and it trades a 10-cent range, that's $1,000, because 10,000 shares, every cent is $100. 1,000 shares, every cent is $10. And it's something like that. You can kind of like, if that's what the range is, and that's one thing you can be good at, is just knowing, hey, I can get $1,000 off this quick. This looks for a quick bounce. And if it doesn't, that's one of those things you can set one of those stop losses on and just like play it, risk, reward, and just know your risk reward before you even play it. Yeah. Which is something I definitely want to get a lot better at for these quick plays.
And then from a trading aspect, something that I've been working on recently is shorting some pigs that have just gone absolutely wild. So most recently it's been Nicola and MNRA. And I've dabbled in fuel cell a little bit. That's FCEL.
And you short and buy puts, correct?
Yeah. So for the most part, we talked about inside the options podcast, and part 2 is going to be coming up. Something that I touched on is that I don't like to touch things with an implied vol over 120%. If this sounds like gibberish, go back and listen to that podcast. But I like to take the puts as well, but like on a move like Nicola, the puts were already trading at 220 implied vol. So I took more common shares short than puts, which that was stupid, because the one guy on Twitter he put 750,000 in puts, and he made a net profit of like 2.2 million overnight.
Sheesh.
So it was a good trade, but looking, hindsight's always 2020, right? So I really want to, I put some money into a short account.
Hey, I guess you could call what we're doing right now 2020 hindsight. Get it? 2020, yeah.
That's a good one.
Right? Hey, not bad.
Yeah. So I think this year, what I really want to expand my my knowledge, and so I took, I did the short account, and I was actually down a little bit, and then now I've taken it up, over 160% now. So I'm going to be shorting a lot of the pigs that I think just have great downside, and just having some conviction. I've been eyeing Tesla. I really do think that Tesla's coming towards. I really think that Tesla's coming towards the top. Their deliveries this year, or this quarter, were right on par with the estimates. That's not good for a company that's up 25% this month and 100% to the year for their deliveries to be right on par. So I think that, Tesla, maybe it sees 800 and then I think that might be, we might be closing in on top. So that's kind of for a trading aspect. That's kind of what I really want to work on.
All right. Is there anything else that you'd like to talk about for 2021 and what you're going to do differently?
I think we pretty much touched on everything. Like I said, is that let's see what the market gives us. 2020 was an awesome year, but that doesn't mean anything, okay? Nobody cares about what you did in 2020 when we're closing in on 2022 in 12 months. So, let's get back to it. Stick to what we know. Pay your estimated tax or half of it. Pay half of your estimated tax by January 15th. I'll tweet out the link. Okay, it'll be a link from the IRS. And like I said, is that we all have goals. I love seeing the goals, but understand that if we see some market choppiness, that you're not going to make 4K a day. Or during the summer, you're probably not going to make 4K a day.
For your paying your half of your taxes,
yeah.
Would you just recommend going to your cost basis, looking at your gains and paying like 10, 15%?
Yeah, well, I mean, so what I would do is for instance, let's say that you started with $5,000 this year inside your account.
Yeah.
And you took that account to $25,000. I would take the $20,000 and figure out what your tax bracket is.
Yeah, and take 10%. Yeah, that's what I'm saying.
Yeah, exactly. So
that,
take 10, 15%. Oh,
yes.
yeah, exactly. Yeah, so take 10, 15%. Exactly. And I'll tweet out that link. It'll be a link from the IRS. You can either pay by your bank account, you can either pay by your debit card. So that's how I do that by January 15th.
Not financial advisors, by the way.
Yeah, I literally know nothing.
We're not responsible for any losses, only your gains.
Again, I still have an accounting 202 class to take at the College of New Jersey, who is now my arch nemesis. If you know anything about accounting 202, hit your boy up.
Yeah, and one more thing for the whole 2020, 2021 thing. I know you used the playoffs analogy, but it's the same thing. Like, no one cares if you won the championship last season. Like, it's a new season, new record, you're 0-0. Like, let's get our first win, let's win the championship again.
Exactly.
But and the first thing to winning that first championship is the first game of the season, and we will start it off with your brand new swing. What that is.
Yeah, so my brand new swing, and there's some pretty big guys on this, is NVIV.
Norway, Valentina, Indigo, Very.
So I had kind of like a feeler position on, and so I've recently scaled into the position because, pretty substantially. Because I think that this has two catalysts. This has pathology and the 12 and 24 month Inspire data. I think that this sees a pretty good run. The market cap's sitting pretty low. They had an offering at 80 cents in October, so it's really not that. It's right where the offering was. So the risk to reward's pretty good. And then they also had an offering in April at 175. So this thing was trading at 175 and had an offering. And insiders bought at 179 in March. So, we all know how these pennies go, and especially the bios. The insiders are not going to lose money on this. We know that. So I think that this could see 150. I really think that this could be really good. I like this a lot. There's some bigger players on it. The chart looks good. Like I said, they needed the cash. Now they have the cash. The insiders bought. There's some pretty big institutions on it. So I kind of scaled into this position. I was watching the chart. I scaled into it, and now I like it. It's got a pretty big gap over. It's got a pretty big gap to like the $1 mark minimum. So definitely $1. If we get some good news, this thing could really take off. So NVIV, I scaled into it. J&J, baby. Can we talk about J&J for a minute?
You can talk about J&J for a minute.
Oh, they gave me the all-time, Mr. Johnson & Johnson gave me the all-time highs right to close out the end of the year. I think it was right at 3 p.m. It made its all-time high. Thank you, sir. Obviously we scaled into the February 5th options, and so far they're doing pretty good. It did have a lighter volume week, so we could see a minor pullback, but hey, I saw a tweet on Thursday, talking about Tesla, and this goes the same for J&J. Never short a stock going to all time, that's crossing all time highs, and I like that. I like that analogy. So, I think, there was also a report that data is coming within 2 weeks. Hopefully we can set, hopefully, the only thing about J&J is that they never ever, they don't care. They do their own thing. They don't try and like tease investors. I like to be teased a little bit, So, they just drop the good news when they get it. They don't say good news is coming. The CEO never pumps the stock. Jerk. Gosh. That's the only thing about J&J. Hopefully we can get something on the books for them, when data's coming out and kind of run into that, 165, 170 would be good. So I'm really excited about the J&J. The SPACs look good. IPOC has their vote on January 6th. Are you excited for that? Or how are you feeling going into IPOC?
Yeah, I'm actually super excited for IPOC. I'm sad their CEO won't come on the podcast for an interview, but if he's too busy, making memes on Twitter, trying to be Elon Musk, I understand. So, it's cool though about IPOC, and Clover Health and everything. I was just at Walmart. I was on the news for a stabbing incident at my local Walmart, and that Clover Health, Walmart, health insurance, it's all there. I mean, it's a sign. So it's definitely,
dude, that was crazy.
Yeah, well, I mean, I just happened to open Facebook and I saw the news feed was just at like 2 seconds ago they had started something, and that Walmart is so close to my house, so I got in the car, I looked at where he was filming from, and I just pulled up on him, and I was like, oh my God, like, I would have stopped it. But apparently the dude's okay. Just a quick knife to the neck, but, I think he's all right. So I did think about it after. I was like, damn, that was kind of insensitive. But, here we are. New year, new me.
New year, new you. Hey, add that to the routine, huh?
Yeah. Add to my routine every year is on the first day of January, I tweet New Year, New Me. So is that all for your swings?
Yeah. I'm excited about the SPACs. I'm excited about NVIV, and J&J. And then let's get some, I'm going to look for some new stuff, but I'm currently moving some money around. I'm going to see, I want to feel out the market. I like to take the first 2 to 3 weeks of the year, see, kind of see what's shaking and baking, and then go from there.
All right. Well, to close out the episode, we have the 2020 Fintwood Awards. Woo! Okay, so to start it off, we have the first category, Best Call of the Year. Starting with UAVS, going from 50 cents to $5. DD by Hugh Henney.
Woo woo.
And also buy, sell, short. We may forget some people. Everyone claims different stocks, so we're just going to, try our best here. Fubo at $9 by Mr. Zach Morris. Waiter at 30 to 50 cents by Incredible Bob. And VTIQ called at $9 by Mr. Zach Morris. And the winner is, do you have any input on these?
No, I mean, these were all great stocks. I mean, they gave huge returns.
And although some have different percents, I mean, this isn't all about percents. So the winner is, with no further ado, it's Fubo from Mr. Zach Morris. From $9 to over $60 with like what seemed like a month and a half of green days in a row. It's really hard to lose money on that. And congrats to you, Mr. Zach Morris. Your gift is going to be coming in the mail. So now we have worst call. We have Ship anytime it was called above 15 cents. We have Tesla puts. We have Luckin Coffee. And we have Nikola at $70. And the worst call of the year goes to Nikola at $70.
Yeah. I actually
right before Trevor Milton left the country.
I actually wish I took that call short at 70. That would have been nice.
That would have been great. So our next category, scummiest offering. Hugh, I'm sure, knows a lot about these, as most of his calls all have offerings. So the first one is NNDM with its 11:30 offering on a Sunday.
Nice.
We have Jivo for its midnight offering on a Thursday. And Zom for just having a shitty offering when everyone was in.
Bitches.
And the winner is Jivo for its midnight offering in the middle of the week.
Wow. Impressive.
Wow.
That's good.
Real douchey of you, Jivo.
Yeah. Everyone's short Jivo.
Okay. Most overhyped play of the year. We have GHSI in March, April, May, June, and July. We have UAVS every second after it ran, as it is clearly merging with Amazon, saving the Amazon, and probably going to buy the company Amazon. We have SPAQ, SPAQ, which is going to create the Apple car. And of course, we have IDEX, which I'm pretty sure Yates said would save the world for meteors. And the winner for most overhyped stock of the year is UAVS. What? Congrats, Stan. Congrats. Saving the Amazon. Okay. Now,
what's next?
We have Best DD. First is Dip Deity, Blue Collar DD. Then it's Incredible Bob's DD on Waiter. And after that, we have Manpreet's SPAC DD that he's been killing for the past few months.
What the fuck am I?
And the winner.
What am I? Nobody fucks with me no more? I'm just a podcaster?
Well, I mean, you do good in your job. I don't know, man. Your name's just not on the list. So
what listeners chose Dan over me for?
Well, it wasn't the listeners. I made this. I made the list.
And I quote, "If I know what the company does, I know too much."
Okay. Oh well. Here I will read off why Blue Collar DD was sent in. Jill went 100%. Tuesday got delisted after I claimed I was bearish. Party City went over 100%. And the other one I went to, what was it? The sex shop went over 100% too. So I mean, you really can't argue with those numbers. But the winner is a 3-way tie. Congrats, everyone. Wow. I didn't want to give the thing to myself, and I like the other two people equally. But this also is incredible. The votes came in this way. Thousands of votes came in.
Hundreds of thousands.
The most WTF moment in Fintwit 2020. This is a big one. Kodak going from camera company to COVID saver.
Yeah, sounds reasonable.
Yeah. No holes untouched. Artist none. And Elon Musk tweeting, I think the share of Tesla is overpriced. Okay, so it's a big one this year. And the winner is No Holes Untouched. What a great series. I don't think we'll ever see anything quite like that in Fintwit ever again. It was something to be seen, but not something you'd want to be felt. So, two more categories before we send you off into the trading week. The biggest comeback play of the year. SPAC turning to Fisker. IDEX overcoming its shortcomings. GHSI's recent surge. Kodak, after its years of being down. Overstock going from $3 to over $100, and Penn. And the winner is SPAC going from $8 to over like $20 after everyone was so sad and it merged, and after everyone saying Zach Morris sucked, it came back, and if you had diamond hands, you were the man that day. So congrats, Henrik Fisker. and we still don't like you for not coming on the podcast.
Yeah, fuck you, Henry.
And the very, very last category, the best stock market podcast of 2020. And this is a tough one.
This is a tough one.
And it got so many votes. And the other two people were really good, but
hey, you know what?
all in all, these are the contestants.
The winner of this one should get like at least 2,000 reviews on Apple Podcasts, like 5 stars, for being the winner.
Yeah, and maybe millions of dollars, right? And Nobel Prize. So the nominees are the Motley Fool podcast,
Meh.
Investing for Beginners, and Pennies Going In Raw.
Oh.
Okay, and with over 400,000 votes in this category,
By far the biggest
and
lead.
it was really, yeah, I would have said it was really close, but re-looking at the numbers, it's pretty sad how bad this turned out. And the winner is Pennies Going In Raw. Woo! Yay! Wow, good job.
Oh my gosh.
Congrats
who do we
to the
thank?
listeners. The listeners?
Yeah, thank you.
No, forget the listeners. Dude, me and you did so good. Like, Vinny did decent, whatever, but me and you, we killed it. We killed it. Like, it really couldn't have been done without us, man.
Yeah.
So, good job, me. Yeah, I mean, you did all right. But, I mean, really, this is a big moment for me, and I'd like to thank, all my hard work, and it's just something incredible.
The chair.
I'm just so happy to see
The chair
it.
on the porch.
Oh, yeah, the chair Ultra sent me. Well, no, then I'm having to give credit to Ultra, so I stand up and record. It's just my God-given body. Thank you guys for joining. We're going to have an awesome 2021 with lots more podcast interviews with successful people and CEOs. We're in the works of 2 of everyone's favorite SPACs being interviewed, and we'll try and get those out to you ASAP. Oh, and a big shout out to Sean C. Rice on Twitter for giving us a brand new clean green logo design. And along with the logo design, we should have some new shirts coming out soon. So stay tuned. Make sure to leave us a 5-star review, and we'll see you next week.